nonpartisan Congressional Budget Office. That's a mouthful.
Yeah.
But the CBO, the number everyone looks at, they haven't released a score, but go through the figures that you do know. Go through these tax breaks, because you know so much better than I do. But to me, tax breaks, how does that help the lowest income bracket that doesn't pay much taxes to begin with?
If you've got nothing to take advantage of against a tax break, it doesn't help. So the score from the CBO will tell us how much this will cost overall. But for individuals, here's how it works. The credits are going to grow depending on how old you are. So it's quite conceivable that a 20-year-old buying insurance who's generally healthy can get insurance on the market for $2,000 a year. However, if they don't have income against which to write it off, that doesn't help them. Here's the problem. As you get older, here's a perfect example. A 60-year-old. Find me a 60-year-old who can get proper insurance except for catastrophic health care for $4,000 a year. As you get older, this is going to be a big problem for you. The tax credits and income will get reduced depending on how much you make. So for an individual making $75,000 or more, they'll start to get less and less. A couple making $150,000 or more will start to get less and less. But this is still fundamentally a bit of a tax break for those earning a lot of money. You mentioned health savings accounts in the opening of this segment. It's going to double the allowed contribution for health savings account beginning in 2018. For an individual, you'll be allowed to put in $6,550. For a family, $13,100. Here's the interesting thing. If you let your coverage lapse, you will see an increase of 30%. It'll be a surcharge on your premium of 30%. I'll call it a surcharge, not an increase, because it's not a consistent increase. So fundamentally, who are the winners in this? The young, if they can get insurance, the wealthy, because they get a bit of a tax break, and the health insurers. As you and I know, Stephanie, the health insurance companies have not been doing well on the stock market since Donald Trump's election because of the uncertainty about what's going to happen. We're moving into a market-based healthcare system now again, and that's going to be good for the healthcare companies. The losers are the elderly, because, like I said, if you're 60 years old and you get a $4,000 tax credit, you can't get insurance that's of any value for $4,000. Poor people who don't have taxes against which to write off those credits. So they're going to suffer. And of course, if you're sick, you continue to have problems. You can get insurance, but you're going to have to pay for it at market rate. Stephanie?